Hello everyone, this is Ross with Market Traders Daily, and this is today's video analysis for June 16, 2020. Today we're taking a look at the GBPUSD Greater British Pound versus the US dollar for today's trade analysis. Sometimes in the market it may be difficult to discern direction for the day, and the direction may change within the day. Yesterday, we were talking about the market on the pound dollar left hand side as a downtrend. We studied this red trend line, and we knew that over the past few days, the market had been going down. And the potential was looking for an opportunity to go short in the direction of the red trend line. Now, the market obviously had different intentions. It found a breakout back above the green zone, hit the pink zone, broke the pink zone, and now has turned back bullish again, once again here for the pound dollar. So sometimes, again, determining direction and determining which way to trade may be difficult, but what we can do is look for lower risk and higher reward opportunities. And sometimes that's the best we can do, is look for a low risk opportunity in the direction the market's going at the current moment, and then wait for the results afterwards. And at this point, the market is moving higher. We've seen a shift in direction from yesterday, where yesterday over the past 3 or 4 days was bearish. Today we see the market now pushing back up again. So it makes sense that if you're going to trade in that direction, you'd want to buy as close as possible to the blue trend line, and at this point the blue shaded area, buying at the blue zone. Now, could it reverse and go back down again? Sure, it could. And at that point, you'd want to look for opportunities to go short as close as possible to the green shaded area. Right now, in the past, let's say 8 to 12 hours, we have seen the market bouncing around between the blue and the green shaded area, and providing actually opportunities in both directions. If you look at the right hand side, this is the 5-minute time frame, and in a similar time frame, we're looking at resistance at the green zone and support at the blue zone. And right now, the market's about halfway between the green and the blue shaded area as we wait for the next opportunity. So when we're talking about looking for low risk and high reward, no matter which direction the trade is going, whether it's going to continue to go up in the direction of the blue trend line or turn right back around and go back down in the direction of the red trend line, our lowest risk entry points are going to be as close as possible to the green zone or the blue zone. Whether we're buying, we buy at the blue zone. Whether we're selling, we sell at the green zone. Provides us with our lowest degree of risk and our highest potential reward. We zoom it in a little bit like this on the left hand side, so our risk and our stop loss at this point would be above the green zone for being short and selling the pound dollar, or below the blue zone for being long and buying the pound dollar. At least we have control over where our risk entries are being made. Our lowest risk entries are being made at the green zone or at the blue zone. Again, if you're going to buy in the direction of our current momentum, which is more bullish, you'd want to do it closer to the blue zone. So if you look at the right hand side, this is the Hawkeye volume indicator. It's pretty easy to see that when the market makes a turn higher, and I'm going to see if I can get a circle on here that we can see. When the market makes a turn back to the green zone, and we'll just make it a red circle so we can easily identify it. When the market makes a turn back to the green zone, we can see that the Hawkeye volume indicated a bearish move right there from the green zone, right there where the red circle is. So that gave us a higher expectancy of a turn to go back down again. And then down here at the bottom, at the blue zone, the Hawkeye volume turned green, and that gave us a higher expectancy that it was going to turn back higher again. I'll just make that one green there. And so again, when you're looking for low risk and high reward, you're looking for the most precise entry point, and you're looking for some degree of high expectancy. So to do that, again, buying at the blue zone or selling at the green zone, using a tool like the Hawkeye or some grouping. We talked about this yesterday in the live trade room. Some group of moving averages, short-term moving averages, or stochastic or MACD, when it reaches the blue or the green zone, to give you your highest confidence that the momentum is shifting back in the other direction. But again, what it comes down to is lower risk and higher reward. The risk is it breaks through the blue zone, or the risk is it breaks through the green zone. And to get the lowest degree of risk, we want to buy or sell as close as possible to one of those zones today for the pound dollar.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.